Good guys, Willard here from Kofkin Bond for another market update for the month of October. With grand final season over and the countdown to summer begins, despite ongoing lockdowns and rising vaccination rates, we are paving our reopening of borders and businesses. It's a mixed bag on the economic front after reaching record highs in August. Global share markets tumbled in late September. There are concerns around rising inflation, bond yields, and if the US Federal Reserve begins tapering bond purchases later this year expected. Markets also grappled with the rising COVID cases, the potential collapse of the Chinese property developer Evergrande, and supply chain blocks and rising oil prices. The US S&P 500 and the Australian ASX 200 finished the month down 5% and 3% respectively. In Australian consumer confidence, in response to the state and federal governments revealing their reopening, the ANZ Roy Morgan Consumer Confidence ratings over the last 3 weeks of September to a 10-week high to 103.7. Prior to that, retail trade fell 1.7% in August and 0.7% over the year. And while unemployment fell from 4.6 to 4.5 in August, participation and hours worked all fell. This reflects a large number of Australians who stood down due to COVID but not actively seeking work. Job vacancies are down 9.8%. That's 36,200 vacancies in the 3 months leading to August in 2021. The Core Logic National Home Value Index rose by 1.5% in September and up 20.3% for the year. Astounding stuff. October experienced the biggest rise in the month, up to 3%, and with Melbourne being the worst performer out of all the states, only up 0.8%. Home buying activity could be brought forward as a change of lending policies look likely coming in the coming months. Pent-up demand in Sydney and Melbourne as lockdowns are eased and expected to spur buying activity. The outlook for the property market looks a little darker, however. Tighter credit policies will have a negative impact on demand, which will flow through to a slower rate of growth in values. The number of dwellings approved rose 6 points in August, ending a 4 consecutive month decline, well of the 6.5 decline expected. Approvals remain strong despite the unwinding stimulus measures in April and the ongoing lockdowns. Treasurer Frydenberg budget deficit in 2021 financial year is 80 million better than expected at 134.2 billion. The net federal debt was 592 billion, and that is 28.6% of our GDP. On commodity markets, oil prices surged to up 10% to a 3 in September, and that pushed up local petrol prices, with petrol at record highs in some cities. Meanwhile, in iron ore, dropping another 5% in September on the falling Chinese yen. This put downward pressure on Australian shares. The Australian dollar fell 1 cent to finish the month at 72.2 US cents. It is a cyclical commodity-based currency as the market starts to doubt the global growth trend and in particular the Chinese growth trend. Commodity price fall and commodity currencies, the Australian dollar and the Canadian dollar, fall as well. In the short term, Chinese growth concerns fall in the iron ore price are seeing the Australian dollar. At the same time, the US dollar is expected to rise as bond yields in the US and as interest rates rise are more likely in the US, especially after the Federal Reserve's meeting last week. Now to the Kofkin bond portfolio, see a loss of 3%, but for the quarter ending in September, we're actually up 0.5%. And that's all. Thank you for tuning in and looking forward to talking to you next month. Bye.